Every major war of the last century and a half has created more millionaires and billionaires than the decade before it. This is not accidental, symbolic, or theoretical. It is mechanical. Every conflict activates a financial engine designed to take public money, transform it into guaranteed private revenue, and distribute that revenue into the hands of institutions positioned closest to the flow of government spending. This engine predates modern markets, outlived monarchies and empires, and continues to function today with extraordinary efficiency. What you're about to see is not speculation. It is a structural pattern that repeats across eras, ideologies, and technologies. A pattern that enriches the same types of companies and the same types of power networks every time the world prepares for conflict. A pattern still running today, whether a war has begun or not. Understanding how this system works starts with a simple reality. Governments are the only entities capable of spending without limit. When a nation prepares for war, considers war, fears war, or enters a geopolitical rivalry, it opens a financial pipeline that instantly overrides normal economic constraints. Demand becomes infinite. Competition becomes irrelevant. Budgets expand without facing political resistance because security overrides cost. Once this mechanism activates, private companies receive a type of guaranteed revenue that does not exist in any other sector of the global economy. The moment the state mobilizes, three forces scale immediately: defense budgets, long-term contracts, and permanent demand. These forces remove commercial risk for the firms involved. There are no consumers to persuade, no product cycles to compete with, no normal market downturns to survive. The government becomes the buyer of everything necessary for modern conflict, or the preparation for it: steel, energy, aircraft, satellites, software, cyber systems, surveillance tools, transport vehicles, base infrastructure, intelligence networks, reconstruction equipment, and the endless logistics required to keep global operations running. Where there is a guaranteed buyer, there is guaranteed profit. And where there is guaranteed profit, wealth consolidates rapidly. This is the first major truth. War spending is not spending at all. It is revenue. Revenue that cannot fail, cannot collapse, and cannot be disrupted by normal market dynamics. The second truth follows naturally. These revenue streams are so large and so consistent that they form the foundation of modern financial dynasties. A company that becomes embedded in the war machine does not simply grow, it becomes permanent. Its fortune compounds through certainty, not risk. Certainty backed by taxes, borrowing, political fear, and national prestige. Once inside the system, firms evolve into fixtures of power. The pattern becomes clearer when viewed across three defining eras. World War II generated the largest industrial mobilization in human history. Governments issued contracts at a scale impossible to imagine today. Companies were paid to build factories before producing a single weapon. They were reimbursed for costs, compensated for overruns, and guaranteed profit margins under cost-plus pricing models. Entire industries, aviation, steel, chemicals, munitions, heavy machinery, shipping, exploded in size. When the war ended, the infrastructure, the political relationships, and the financial incentives endured. The global military-industrial complex emerged not because of ideology, but because the economics were too powerful to undo. The Cold War extended this pattern. Unlike World War II, it lacked a single defining battle, but it generated a continuous stream of government contracts for nearly 50 years. Satellites, missile systems, long-range aircraft, encrypted communications, intelligence analysis, and early computing innovations were all funded by defense money. Entire sectors of modern technology were born not from commercial demand, but from geopolitical rivalry. Threat perception became an economic engine. The anticipation of conflict created more revenue than conflict itself. Nations built systems not for battles already happening, but for battles that might occur decades in the future. The modern era transformed the machine again. Instead of mass industrial mobilization, wars in Iraq and Afghanistan shifted operations toward privatization. Tasks once performed by national militaries, base construction, fuel supply, protection services, intelligence gathering, drone operation, logistics management, and post-war reconstruction, were outsourced to corporations. These firms operated under multi-billion-dollar contracts with minimal competition and near total insulation from market risk. Their revenue did not depend on victory or strategy. It depended on continuation. If fighting persisted, they profited. If reconstruction began, they profited. If geopolitical instability lingered, they profited. Across these three eras, one mechanism repeats. Guaranteed demand produces guaranteed fortunes. Companies do not need to speculate. They do not need to innovate rapidly. They do not need to fear recessions or supply shocks. Their revenue is tied not to economic cycles, but to geopolitical cycles. To understand how this mechanism works today, examine three domains: defense contracting, resource control, and financial markets. Defense contracting has become structurally permanent. Aircraft carriers, missile defense grids, global bases, cyber warfare units, space-based surveillance systems, and artificial intelligence-driven targeting platforms all require decades of funding. A weapon system introduced today may still generate revenue through upgrades, maintenance, software integration, and component replacement 40 years from now. Defense companies do not sell products. They sell time, permanence, and dependency. Resource control forms the second domain. Modern conflict revolves around access rather than territory. Control of oil routes, semiconductor supply chains, rare earth minerals, undersea cables, and major shipping passages defines economic strength. Protecting these assets requires constant military presence. That presence requires constant spending. Regions rich in strategic resources become zones of unstable tension, tension that requires budgets to remain elevated indefinitely. Financial markets form the third domain of the machine. Wars and geopolitical instability are funded with debt. Governments issue bonds to pay for operations. And the financial industry earns interest, fees, and derivative profits on every issuance. Insurance firms profit from geopolitical risk. Hedge funds profit from volatility. Banks profit from transactional flows. Even rumors of conflict shift markets enough to generate massive wealth for those positioned correctly. The battlefield extends into the bond market, the commodities market, and the currency market. The financial layer of conflict is often more profitable than the conflict itself. At the core of this machine is the billionaire engine, the process by which individuals and institutions convert conflict into concentrated wealth. Multi-billion-dollar contracts elevate stock prices, unlocking executive compensation and long-term equity windfalls. Privatized military functions turn war into a scalable business model. Reconstruction guarantees revenue long after conflicts end. Companies embedded deeply into military logistics become irreplaceable due to switching friction, supply chain complexity, and national security classification. Intelligence, surveillance, cybersecurity, and satellite imaging create entirely new billionaire classes built on data rather than hardware. The war does not randomly enrich people. It systematically elevates those closest to the mechanism. The most overlooked truth is that the war machine does not require actual war to function. It requires tension, rivalry, suspicion, strategic uncertainty. Peace does not increase defense budgets. Fear does. When alliances shift, budgets rise. When adversaries test boundaries, budgets rise. When new technologies emerge, budgets rise. The system is structured to treat geopolitical instability as permanent. Supply chain vulnerabilities, energy choke points, territorial disputes, ideological conflicts, and great power competition become the justification for continuous spending. The machine prints money whether a shot is fired or not. War is not merely a battlefield. It is a business architecture, a financial engine, a global revenue mechanism that transforms national budgets into private fortunes, converts fear into economic stimulus, and turns conflict into one of the most reliable wealth creation systems in history. Once you see the structure, you can no longer view global events through headlines or political rhetoric. You begin to see incentives, revenue streams, market reactions, and strategic positioning. You no longer ask why a conflict happened. You ask who benefits from its possibility. The truth is simple. If you follow the money, you can see the next conflict long before it begins.